Let's go back to 2019. What did the BIS do? Reclassify gold as the only other tier one asset. So you have gold as a tier one. You have this cartel bank who's been really the center of all the conspiratorial talk forever. Now the custodian of the largest silver trust and one of the largest gold stockpiles in the world, along with BlackRock. You have all the gold and silver being shipped across the globe right now to the COMEX market. You have something called the gold revaluation account. Every central bank on the planet holds gold in the revaluation account. All of them. Now, I've thought about the Dutch National Bank. The guy says, let's revalue gold. We should revalue gold. You got members of the Bundesbank. Let's revalue gold. We should put it on par with its current value or higher to offset our balance sheet. Or how about Senator Cynthia Loomis from Wyoming, who advocates for revaluing gold in order to fund the strategic Bitcoin account? More and more and more people are talking about revaluing gold. How about Judy Shelton, who I just interviewed? Judy Shelton says they're going to revalue gold. Not in so many words when I asked her specifically, but she wants to have a 50-year treasury collared to gold, redeemable in gold. She said her and Trump had discussed it during the first administration. If you remember, she was his nominee to run the Federal Reserve. Wasn't confirmed. Probably will be this time, at least on the board of governors. They're good friends. She said, we discussed it. We discussed issuing them on July 4th, 2026, the 250th year anniversary. She said, Andy, they're going to do that. They're going to issue 50-year treasuries backed by gold. I said, Judy, well, what about auditing Fort Knox? She said, absolutely. That needs to be done. And I said, what about revaluing gold? And not in so many words said, yes, it would benefit all the central banks who have been accumulating gold for the last several years. And it would definitely benefit the United States because every $4,000 increase in the price of gold gives a $1 trillion free and clear to the Treasury General account. And wouldn't even require congressional approval. Jerome would just need to be told by Scott Bessent, who would be told from Trump. Trump would say to Scott, hey, tell Jerome to revalue the price of gold. Bang, it's revalued. Just like that. If you're going to establish confidence, reestablish confidence, like Judy said, you need to peg it to gold. Use the marriage of blockchain technology, like a stable coin, and gold. Judy said to me, Andy, I hope they issue stable coins off the 50-year treasury backed by gold. How's that? Interesting, isn't it? And who controls the on-ramps and the off-ramps to all the stable coins now with all the treasury issuance behind the stable coins? Well, that's pretty much the government. So it's a way to sidestep the CBDC, have the same effect of control in and out, to peg it to gold, to revalue the price of gold, to bring it all home first. I mean, you can't make it up. As far as I'm concerned, I don't care what people say. I'll go out on a limb, and maybe I'm wrong. But Occam's razor, man, says that when all of these things start lining up, it's the most logical answer that prevails. To me, they're bringing all the gold and silver home as much as they can. They're saying it's because of tariffs. It's not. They're the biggest cartel criminal bank in the world holding GLD and SLV. All of these things, aside from it being a tier one asset, and the realization that our treasury market is being forsaken because of inflation, default risk, confiscation risk, sanction risk, all of that stuff. In my mind, Jesse, that is the trend. They're going to do something with the only other tier one asset in the world. They're going to peg it to a system. They're going to use blockchain technology, a la stablecoin, and it's going to happen, in my opinion. And that's why I think all the gold's coming home. That's why I think gold is so strong. They want it to go higher. And the only question that I have is, are they going to let it do what it's been doing for the last couple of months? Boom, 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 boom. Or is it going to go bang on a Friday night, Monday morning? I don't know. But I do think, honest to God, I really do believe that there is something much bigger going on in the gold market right now than most people would give credibility to.
Let's not kid ourselves. What we're witnessing right now is not a random fluke. This is monetary warfare being played out in broad daylight, and gold is smack in the center of the battlefield. You don't see central banks hauling thousands of metric tons of gold back to domestic vaults for fun. You don't see a criminal cartel bank suddenly managing both GLD and SLV out of the goodness of their hearts. And you certainly don't reclassify gold as the only other tier one asset alongside sovereign debt unless you're preparing for a paradigm shift. And yet, that's exactly what has been happening since 2019, and nobody's talking about it. Or at least, not loudly enough. Now I get it. The average American isn't paying attention to the inner workings of the global monetary system. They're worried about AI stocks, Taylor Swift ticket prices, and their 401k. But while the public is distracted, the most powerful monetary institutions on the planet are playing chess 5 moves ahead. When gold was reclassified as a tier one asset, it quietly changed everything. You see, before 2019, gold was treated like a commodity, a rock you stored in a vault that didn't earn interest. But now under Basel III regulations, gold is a zero-risk asset, on par with U.S. treasuries and cash. That one shift made gold a central bank's dream asset again, and suddenly, gold wasn't just something you held, it became something you needed. The Dutch, the Germans, the Chinese, they've been telling us in plain language, we're bringing our gold home, we're revaluing our balance sheets, we are preparing. But here in the US, the story's been cloaked in noise and distraction. Judy Shelton, the woman who came within a whisker of joining the Federal Reserve, has openly discussed the idea of 50-year treasuries backed by gold. Redeemable, pegged. And her conversations with Trump about launching them on the symbolic July 4th, 2026, the 250th anniversary of American independence, are not some fringe theory. That's a major breadcrumb. It's monetary fireworks in the making. Here's the part that should make you sit up straight. Every $4,000 increase in the price of gold adds $1 trillion to the Treasury General account. Let that sink in. Without needing congressional approval, just a directive. That's the golden gun that could balance the budget, restore confidence in the US dollar, and buy time to restructure the entire system, all without printing another dime. It's the nuclear option of monetary tools. And who controls the trigger? That would be the Federal Reserve Chair, guided by the Treasury Secretary, following the will of the President. This is why gold revaluation is no longer a fringe conversation. It's the elephant in the room. And what about this whole idea of blockchain technology and stablecoins backed by gold? Well, ask yourself, what's the one thing that both hard money advocates and digital currency dreamers agree on? Trust, transparency, accountability. Gold-backed stablecoins offer all of that: physical backing, digital tracking, programmable transparency. If gold gets pegged to a treasury-backed blockchain, it would not only bring confidence back into a broken monetary system, but it would bypass the most feared tool in the globalist playbook, the central bank digital currency. A gold-backed, treasury-issued stablecoin would sidestep the privacy concerns of CBDCs while providing ironclad security and control to the government. Sound familiar? It's the same playbook, just dressed up in patriotism and sound money. And who benefits the most from such a revaluation? Central banks, the very same institutions that have been gobbling up gold at record rates for the past 3 years. The same ones who are now in possession of more gold than they've had in half a century. So let's not pretend this isn't coordinated. The BIS didn't reclassify gold for kicks. The ECB didn't suddenly become gold-friendly for nostalgia. And the US didn't go from net gold exporter to gold hoarder by coincidence. This is a global game plan, and the train is already in motion. You look around and ask, why is gold rising so fast now? It's because it's finally being allowed to find its real value. The suppression is breaking, the leverage is unwinding. All the years of derivative games, paper gold contracts, and rehypothecated assets are beginning to crumble under the weight of real-world demand. And guess who's not participating in this breakout? The average retail investor. That's right. While gold pushes toward $3,000, the premiums on coins are at historic lows. There's no retail frenzy, no lines around the block, just a sleepy public watching stock tickers and TikTok, while the world's biggest players quietly secure the ultimate monetary insurance policy. What does that tell you? It tells you that the top knows what's coming, and the bottom has no idea. And when the masses do finally catch on, it'll be too late. They'll rush into a market that's already revalued. They'll beg for delivery from vaults that are already empty. They'll realize that their paper claims are worth nothing in a physical world. And the worst part? They'll be told it's their fault for not paying attention. This isn't just about profit anymore. This is about survival, about sovereignty, about preparing for a future where fiat currencies are digital illusions, and the only things that matter are what you can hold, verify, and trust. And gold, and by extension silver, are the anchors in that future. They're the reset button, the lifeboat, the firewall against monetary collapse. The question is no longer, will gold be revalued? The question is, what role will it play in the new monetary system? Will it back new treasury instruments? Will it become the basis for gold-backed stablecoins? Will it be quietly accumulated and used to pay off sovereign debts without printing a single new dollar? Maybe all of the above. But one thing is clear. The time to position yourself is not when the revaluation hits. It's now, before the fireworks, before the headlines, before the panic. Because when that Friday night comes, and you wake up Monday morning to find gold at $5,000 or $10,000 an ounce, it won't matter what you thought you knew. The only thing that will matter is what you already hold.
My point is all of these things are setting up for something much bigger than I think people are betting on. And my money is on gold and silver reaching levels. And again, I think it'll reach levels that no one dreams of, but that's not why you own it. You don't own it to get wealthy. You own it because it is wealth that has outstood 2 world wars, German hyperinflation, the Great Depression, every single pandemic. And what did he do? What did he do, Roosevelt? Well, his first act in office in April of 1933 was to confiscate gold. Okay. But why? Because he paid everyone $20.55 for their $20 gold coin. 55 cents was a lot of money in 1933. Everyone was happy. And then he devalued the dollar by 40%. Just like that. And now gold was up 40%. Same thing was true in 1971 when they closed the gold window at 35 bucks an ounce. The market revalued gold. Market revalued gold to where it is now at 2,900. Well, what if they just decide to revalue gold that is held on their balance sheet at $42 an ounce in the United States and $35 in every other country, and bang, it's $5,000 an ounce. Well, what does that do? Well, that just gave $1.25 trillion free and clear to the Treasury. What if they make it $10,000 an ounce? Well, that just gave $2.5 trillion to the Treasury. How about $145,000 an ounce? Well, now your balance sheet is completely pristine, offsetting by assets and liabilities. What did Bissett just say? Scott Bissett, we are going to monetize the asset side of the U.S. balance sheet. Well, what assets do we have? $5 trillion plus in assets. The largest being student debt. Well, they're not going to monetize that. The second largest being military. Not going to monetize that. How about land and gold? Oh, maybe. Sure. Why not? Well, what is he talking about by monetizing the asset side of the balance sheet? Do you see the clues that they're giving you? It's his largest asset. That is gold. He admits to it, that the new Treasury Secretary.
Now, I want you to think about this from a different angle. What if everything we're seeing isn't just about gold or silver revaluation, but about a wholesale transformation of the global financial architecture? What if we're moving into a phase where gold becomes the linchpin of a new era, where trust in fiat evaporates and the reset button gets slammed in front of our eyes? Because what's happening isn't just a bull market in precious metals. It's a tectonic shift in the foundation of how the world perceives and stores wealth. When I look at the headlines, or more accurately, the lack of headlines, it's almost surreal. You've got central banks hoarding gold like it's going out of style. You've got U.S. Treasury officials openly discussing long-dated debt instruments tied to physical metal. You've got the world's most infamous banks positioned perfectly as custodians of gold and silver ETFs. And yet, here we are. No coverage, no urgency, no attention from the average investor. This silence should scare you more than anything, because it's in that silence where the biggest moves happen. Let's be real. If the government actually wanted to control gold, they wouldn't need to launch an old-school confiscation campaign like in 1933. All they'd have to do is close down the ETFs, flip a switch. Everyone invested in GLD or SLV would wake up Monday morning to find their positions liquidated and sitting in dollar cash. Nothing illegal, nothing messy. But in that one motion, they could consolidate the largest physical hoard of gold and silver in the world under government-friendly custodianship. Think about that. Why else would JP Morgan, after being fined nearly $1 billion for market manipulation, become the custodian for not one but both of the largest precious metal ETFs? Why would they want to be in that position? Control, influence, positioning? Because the moment something big happens, and I believe it's already in motion, those assets are already where they need to be. You just pull the pin and wait. Now, I don't say that lightly. And I know there's a fine line between healthy skepticism and conspiracy theory. But let's stick to what we can observe. Gold is flowing from the London vaults into U.S. soil in record quantities. That's a fact. The U.S. has flipped from net exporter to net importer in just months. That's a fact. Gold is reclassified as a Tier 1 asset by the BIS. That's a fact. Sovereign nations from the BRICS bloc to European stalwarts are not only increasing their gold reserves, they're demanding repatriation. That's a fact. What does all that suggest? It suggests they want the metal in their own hands before the system changes. And change is coming. Whether it's a new Bretton Woods-style agreement, or the introduction of a gold-pegged digital currency, or a reset of how sovereign debt is measured and managed, gold will be at the center. It always has been. It always will be. And that's because gold is the only asset that can backstop the unimaginable levels of debt we've created. It doesn't require trust. It doesn't rely on someone else's promise. It simply is. That brings me to something I keep coming back to: revaluation. We've talked about $5,000 gold, $10,000 gold, even $45,000 gold. Those numbers used to seem outrageous. Now they feel almost conservative. Because when you start doing the math, real math, about how much gold would be needed to balance sovereign balance sheets, those figures start making sense. If you want to back the US national debt with gold, even partially, you're looking at a massive multiple of today's price. Even a $4,000 move would generate $1 trillion for the Treasury General account. No congressional approval, just a directive, a keystroke. It's that simple. People ask, why would the government let gold go higher? And I answer, because this time they need it to. In the past, gold going up was a signal of failure. Now it may be their only path to credibility. They need a way to restore faith in the system, especially when it's falling apart at the seams. And gold offers that opportunity. If you peg long-term debt to gold, suddenly the dollar has real-world collateral. Suddenly the bond market breathes again. Suddenly the US isn't just another over-leveraged empire. It's the steward of sound money again. And what about silver? Don't sleep on silver. It's gold's little brother, but it punches well above its weight class. Silver has industrial utility, sure, but in a monetary reset, its value proposition skyrockets. It's more affordable, more divisible, and historically, the gold-silver ratio compresses hard when gold runs. At a 90-to-1 ratio today, we're overdue for a massive silver catch-up. And when that rubber band snaps back, look out. Silver doesn't creep, it explodes. Now add in the real scarcity factor. Between industrial demand, especially in solar and electronics, and years of underinvestment in mining, the silver market is stretched thinner than it's been in decades. You want to talk about the mother of all short squeezes? It's not in GameStop, it's in the silver pit. When investors, institutions, and governments all come for silver at once, there simply won't be enough to go around. Full stop. That's why I keep saying, own physical, not paper claims, not derivatives, not ETFs. If you can't hold it, you don't own it. Because when the reset comes, the only assets that will matter are the ones outside the system. The ones that don't rely on promises or third parties. The ones that represent final settlement, not I owe us. This is why you don't wait for confirmation from CNBC or Bloomberg. By the time they start covering it, it's already priced in. You get in while it's quiet, while premiums are low, while the herd is still grazing in tech stocks and crypto moonshots. That's how you front-run the move. That's how you position like a central bank. The writing is on the wall. A revaluation is coming. A new system is emerging. And the only question that remains is, will you be prepared? Or will you be part of the group waking up to find the rules have changed overnight? Remember, this isn't about getting rich. It's about not getting wiped out. It's about holding wealth through the storm. And if history is any guide, those who hold gold and silver will come out the other side stronger, more independent, and more resilient than those clinging to digital illusions. So whether the price goes vertical on a Friday night and opens $3,000 higher Monday morning, or whether we grind higher quarter after quarter, doesn't matter. What matters is positioning. What matters is ownership. What matters is understanding what's happening beneath the surface. Because once it breaks through, the game is over. No do-overs. No I told you so's. Just reality. Gold and silver are not speculative bets. They are the financial equivalent of oxygen. You only realize how much you need them when the world around you starts to suffocate. And friends, that world is already running out of air.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.